associated with. Aaron, of course, you've been focused on value for a long time. You made the move a long time before the street made the move. Again, I got to give you kudos. You were spot on. It looked like you really were too early. But now I want to get your thoughts on where we are, particularly in the aftermath of this jobs report. I feel like value might be overvalued.
You know, it's actually been pretty slow and steady. And though it feels overvalued when you look at it compared to some of the growth, and particularly these mega cap growth names that you see, we're not trading incredibly hot right now just because value was underperforming for 3 to 5 years up until just the last 3 months. Look, some of them are getting at the top of their range. They're getting a little pricier, but a lot of value stocks actually look like they have really great growth stories when you look at earnings. And one of my favorites is some of the material stocks. I mean, we're looking at seriously double-digit gains for the next 2 years. This is what a growth stock looks like, but it's still within the value and doing very well.
Yeah, no, materials have been absolutely mind-boggling. I'm glad I got some exposure myself. You know, Courtney, this jobs report, did it cost you to make any changes to your portfolio?
Correct. Yeah, I would say if anything, the jobs report just kind of reaffirmed our current views that we're likely going to see inflation kick in, because really what we saw is there's clearly a shortage in labor right now, and that's causing increase in wages, which isn't even really justified by the report that came out. You're even seeing companies are incentivizing people to come in. I believe McDonald's is actually offering $50 just for people to come in for an interview, believe it or not. So there's clearly a shortage in labor, which is going to increase wages, which is therefore going to increase inflation. So it's just so much more important that you make sure you have those inflation hedges in your portfolio and making sure you own real assets with real profits. Things like Bitcoins, like long-term growth stocks, are not necessarily going to perform as well in that inflationary environment.
All right, so I want to pick up on that thing and ask about the wage impact on the bottom line of corporations, because this morning, Chipotle Mexican Grill announced that everyone in the company will make at least $15 an hour. In fact, some managers will make $100,000. The stock is under a little bit of pressure. Aaron, how are you now going to start to model the idea that that these, between commodities inflation and now wage inflation, into these names? And are there any companies that you think that can really pass that on to the consumer without losing volume?
So if you think about it from a big picture, it's companies that are very service oriented that don't have a lot of materials. So it's all about people skills. They generally can weather the storm a little easier and don't have to worry about these big inflationary pushes. The other point is companies that are actually dealing in these raw materials, they can quite easily pass on these increases. So materials, as we already talked about, and then service companies. And that also includes a lot of the banking, because a lot of it is really your people cost. So those are two areas that are very easy and less impacted. Obviously, anything consumer staples gets hit really hard, and we're seeing that in earnings estimates for the rest of the year. They're just going down. And then a lot of the consumer discretionary, we don't have big margins, lots of material costs, lots of operational costs. They're getting hit really hard.
Yeah, because